All right, Talk Tickers listeners, get ready, because today we're going to break down Six Flags Entertainment Corp's Q3 earnings call. And I got to say, looks like it's going to be a wild ride. We've got the transcript right here and all that FUN stock info, which tells me you're looking for some investment thrills, right?
Well, the stock has definitely taken us for a spin, up over 7% just today, closing at $45.64. And we got to consider that huge Cedar Fair merger back in July. I mean, that created a true theme park giant.
Okay, so we've got this mega park company, stock's going crazy after the earnings call. Our mission, if we choose to accept it, is to figure out what's driving this surge. And more importantly, are those long-term plans more than just hype?
All right, let's jump right into Q3. Remember those hurricanes that slammed a bunch of their parks? The transcript actually breaks down the financial impact of each one. It's pretty interesting. It shows how Six Flags quantifies this risk for investors.
Yeah, it's like they're saying, look, hurricanes happen, but here's how we deal with it. Makes sense. You can't really control the weather.
Exactly. But what they can control are those special events. And Halloween, let me tell you, it was a monster hit. Attendance went up, get this, 20% year over year in October. We're talking over 1 million more visitors compared to last year.
Whoa, that's a spooky amount of growth. I'm guessing that's got to be tied to their season pass strategy, right?
You got it. Season pass sales jumped 8%. And even with a 3% price increase, it shows they're attracting committed customers. They're securing that future revenue, becoming less reliant on daily ticket sales, which can be a little, up and down.
Yeah, super smart move.
Yeah.
Now let's talk long term. Six Flags is going to be spending a huge $500 to $525 million in both 2025 and 2026 on investments. That's a mountain of cash.
It is, and they're splitting it strategically. Roughly $325 million each year is going towards what they call marketable improvements. Think new rides, attractions, anything that basically screams, come spend your money here.
I bet our listeners are dying to know, are they focusing on specific parks or are they spreading it out too thin? And what kind of attractions are they looking at? Give us the scoop.
Well, the transcript kind of hints that water park upgrades are a big focus, which is really interesting, It lines up with their goal of increasing something called length of stay. The longer folks are splashing around, the more they're spending on food, drinks, souvenirs.
The classic theme park strategy. Now, what about the other $175 million a year? I know it's earmarked for infrastructure, not as flashy, but crucial nonetheless.
This is where it gets interesting for investors, Remember all those concerns before the merger about the condition of those older Six Flags parks? This investment shows they're serious about revitalizing those assets.
Yeah, it's like fixing the foundation before you build a skyscraper, right?
Yeah.
You got to have a solid base to support all that growth.
Exactly. Now, their ultimate goal, they want to hit a huge 55 million visitors annually by 2027. That's a bold target, and they're adamant about doing it without those crazy discounts.
Whoa, that's a tough balancing act. How are they planning to pull that off?
Well, that's where their dynamic pricing strategy comes in. Think of it like airlines. Ticket prices change based on demand. Their strong season pass base gives them some pricing power, so they can adjust those daily ticket costs accordingly.
So they're basically banking on that loyal customer base to provide a buffer, even when things are slower. It's a calculated risk for sure.
Absolutely. And then there's that whole length of stay puzzle. The transcript mentions it, but they're pretty vague on the details. What are they actually doing to keep people in the parks longer and spending more?
I think this is where our listeners need to put on their detective hats,
Yeah.
What's Six Flags' secret sauce for keeping those turnstiles spinning and those cash registers ringing?
They gotta have something up their sleeve, some innovative strategies. Are they gonna enhance those in-park shows, add more immersive experiences, maybe even create reasons for people to stay overnight?
Now, those are the million-dollar questions. If we can figure that out, we'll be ahead of the game.
All right, now let's shift gears a bit and connect this back to your portfolio. Remember that impressive target of $800 million plus in unlevered pre-tax free cash flow by 2027.
Yeah, it sounds amazing, but let's break it down for our Talk Tickers listeners. What does that actually mean for a potential investment?
Okay, so essentially that implies EBITDA in the range of $1.25 billion to $1.3 billion. They're aiming for margins of 35% or better. And crucially, they want to reduce net leverage to under 3.5 times adjusted EBITDA. These are the metrics that tell us if their growth strategy is actually sustainable.
So it's not just about getting people through the gates. It's about making money and managing that debt. It's about squeezing every dollar out of each visitor's experience.
Precisely. And they're super focused on driving that per capita spending. We all know the usual stuff, food, merchandise, all those premium add-ons. But what if Six Flags is thinking beyond the typical theme park playbook?
Ooh, now you've got me intrigued. What if they partnered with other brands, created unique events, or even integrated some cutting-edge technology to create experiences you can't get anywhere else?
That's where things get really exciting. Imagine they partner with a fitness brand for themed workout challenges throughout the parks. Or they offer exclusive VR experiences tied to their most thrilling rides.
Now you're speaking my language. That's the kind of innovation that could seriously boost that per capita spending. It's not just about selling another souvenir. It's about crafting experiences that people are willing to shell out top dollar for.
And that's where that whole portfolio optimization strategy gets even more interesting. Could selling off some of those underperforming assets free up the cash to fund these innovative higher return projects? That's definitely a question worth exploring.
For sure. It's like they're saying, we're not just adding stuff, we're strategically building our portfolio for maximum impact. But we got to remember, Six Flags isn't playing in a vacuum. They're up against some other entertainment giants, both in the theme park world and beyond.
Absolutely. They're fighting for your entertainment dollars against other huge theme parks, against other entertainment venues, even those stay-at-home experiences that are so popular now. So how did they stand out?
Well, their size is a big advantage, right? They've got a huge footprint across the U.S., a diverse portfolio of parks, and let's be honest, some iconic, super thrilling rides that are tough to beat.
Yeah, but nostalgia and thrills will only take you so far. They got to constantly evolve and adapt to stay ahead. The transcript mentions those water park upgrades, infrastructure investments, and those mysterious marketable attractions. But is it enough to bring in new visitors and keep those loyal fans coming back for more?
That's the big question for any investor. Theme park fans can be a fickle bunch. They crave novelty. They want value. So are those Six Flags investments going to deliver that wow factor that keeps those lines long?
And we can't forget the whole economic picture. Inflation is still hanging around, and people are changing their spending habits. How's Six Flags going to handle that? Are they pricing things strategically? Are they offering enough value to justify those higher prices?
These are the questions that keep investors up at night. But here's the thing. Six Flags has weathered some serious storms. Literally and figuratively, they've dealt with recessions, pandemics, fierce competition. They've shown they can adapt and change.
And that's what makes this deep dive so valuable, We're not just looking at numbers on a spreadsheet. We're really digging into their plans, analyzing their strategies, scrutinizing their ability to execute. It's about understanding the whole picture and identifying the key drivers of their potential success or failure.
So as we head into the final part of this earnings call roller coaster, we're going to synthesize all these findings into key takeaways, explore some potential trade ideas, and leave you with a final thought to chew on.
Because at Talk Tickers, we're all about empowering you to make smarter, more informed investment decisions. Stay tuned. All right, so let's put on our investor hats here and really examine what this all means for you, our savvy Talk Tickers listener. You're trying to figure out, is Six Flags a golden ticket, right?
You got it. They're making a huge bet on this comeback story, fueled by those massive investments and that ambitious goal of hitting 55 million visitors. I mean, the early season pass numbers look promising, but...
But yeah, those hurricanes are a big reminder. This is a business that's kind of at the mercy of Mother Nature,
Yeah, true. Mother Nature, she can be a tough investor to predict.
Hmm.
So how do we balance these risks and rewards? Six Flags wants to reach $800 million or more in unlevered pre-tax free cash flow by 2027. That's their benchmark. But what does it actually mean for us regular folks?
Right, that's the key question, and that's where we separate the casuals from the serious investors. That number, it translates to an implied EBITDA of, get this, $1.25 billion to $1.3 billion. They're projecting margins of 35% or higher, and they want to get that net leverage under 3.5 times adjusted EBITDA. These are the kind of financial metrics that show us if their growth strategy is actually sustainable.
So it's not just about packing the parks, it's about profitability and managing that debt. It's about getting the most out of each visitor's experience.
Exactly. And they're really focused on what they call per capita spending, how much each person spends. We all know the basics, right? Food, merchandise, those premium add-ons. But What if they think outside that typical theme park box?
Okay, now you're talking. What if they team up with other big brands, create totally unique events, maybe even use some crazy new tech to build experiences you just can't find anywhere else?
That's where it gets really interesting. Imagine like a partnership with a fitness brand, right? Themed workout challenges all over the parks, or maybe exclusive VR experiences linked to their biggest, most thrilling rides.
Whoa, now that's something I'd pay for. That kind of innovation could really boost that per capita spending. It's not just about buying another hat or t-shirt, it's about creating those gotta-have-it experiences.
Right, and that's where their whole portfolio optimization thing gets even more interesting. Could they sell off some of those underperforming assets? Use that cash to fuel these new, super cool projects? Definitely something to think about.
Totally. It's like they're saying, we're not just throwing stuff at the wall, we're carefully choosing what goes in our portfolio. But we got to remember, Six Flags isn't operating in a vacuum. They're competing against other entertainment giants, theme parks, and beyond.
Absolutely. They want your entertainment dollars, just like everyone else. They're up against those other mega parks, entertainment venues, even those stay-at-home experiences that are so popular now. So how do they stand out from the crowd?
Well, their size is a big plus, right? Huge footprint across the U.S., diverse portfolio of parks. And come on, those iconic rides, the thrill rides, they're hard to beat.
True, but nostalgia and thrills, those only get you so far. They got to keep up with the times, adapt, evolve. The transcript mentions those water park upgrades, the infrastructure stuff,
Yeah.
and those marketable attractions, but is that enough? Will that bring in those new visitors and keep the loyal fans coming back year after year?
That's the question, right? Theme park fans, they can be tough to please. They want something new, they want value. So are these investments going to deliver that wow factor?
And don't forget the bigger economic picture. Inflation is still a thing. People are changing how they spend. How will Six Flags deal with that? Are they pricing things right, offering enough value for those premium prices?
Yeah, those are the things that keep investors up at night. But, Six Flags has a history of surviving tough times, all kinds of tough times. Recessions, pandemics, fierce competition. They've shown they can adapt and change with the times.
And that's what makes this deep dive so important. We're not just staring at numbers, we're really breaking down their plans, their strategies, figuring out if they can make it happen. It's about seeing the big picture and understanding what could lead to their success or their failure.
So as we head into the final part of this earnings call Rollercoaster, we'll put it all together. Key takeaways, potential trade ideas, and we'll leave you with one final thought to ponder.
Because here at Talk Tickers, we want to help you make smart, informed investment decisions. Stay with us.
Okay, Talk Tickers listeners, it's time for the final act in our Six Flags earnings call, Deep Dive. We've gone through those financials, brainstormed some growth strategies. We even survived a few hypothetical hurricanes along the way.
Right, haha. But now let's get down to brass tacks. What are the key takeaways for you, the investor, trying to make smart decisions?
Well, for me, it's clear Six Flags is going all in on this comeback story. They're pumping serious money into those parks, not just for shiny new rides, but those vital infrastructure upgrades too.
Yeah, and it's not just about a fresh coat of paint, right? They want people to experience the parks differently. Longer visits, higher spending per person. And all those hints about partnerships and new technologies, that's exciting stuff.
Exactly. It's about more than just bigger, faster roller coasters. It's about making the whole experience more engaging, immersive, and let's face it, more profitable too.
Right, and they've set that clear goal, $800 million plus in free cash flow by 2027. If they hit that, their strategy's working. If not, well, different story.
Okay, so big investments, bold vision, a way to measure success. But what does this mean for your portfolio should you buy FUN stock right now?
That's the million-dollar question, and of course, this is not financial advice. But here at Talk Tickers, we love to explore those outside-the-box trade ideas, right?
Hit me with it. What's the Talk Ticker's hot take on Six Flags?
Okay, get this. What if Six Flags partnered with a major streaming service, like to create exclusive areas or events based on popular shows? Think like Stranger Things Scare Zone for Fright Fest, or a Bridgerton ball at one of their parks.
Whoa, I can see the Instagram post now. Talk about marketing synergy. You've got those built-in fan bases, cross-promotion. You can bring in a whole new crowd.
Exactly. The streamer gets to bring their content to life, literally. Six Flags gets a new revenue stream, expands their audience.
And don't forget the merch. Squid Game hoodies, anyone. Ha ha.
Right. That kind of out-of-the-box thinking, that could put Six Flags on top. And if they make moves like that, who knows? That $800 million target might even be too low.
All right, Talk Tickers listeners, there you have it. Our Six Flags earnings call deep dive. Hurricanes, Halloween, and a pretty wild trade idea to think about. Remember, do your own research, make your own informed decisions, and maybe, just maybe, you'll be riding that Six Flags roller coaster all the way to investment success.
That's it for this episode. Thanks for listening to Talk Tickers.